Hi all and welcome to our weekly report for the week starting Monday the 10th of February. We have just left behind us a volatile trading week and a busy economic data calendar which kicked off February 2020 trading activity. We are heading into a slightly quieter week ahead of us, which starts with China Consumer Price Index data on Monday. On Tuesday, we should be on lookout for UK manufacturing and industrial production data and GDP quarter 4 figures. Going forward, we have a very quiet calendar on Wednesday, with main point of interest reserved for Fed's Chair Powell speech and US crude oil inventories. On Thursday, we should be on lookout for US CPI data and jobless claims. The week will finish on Friday with China industrial production and retail sales figures, Eurozone employment change and GDP quarter 4 figures, and in the afternoon US retail sales, industrial production and Michigan consumer sentiment. Now, let's take a look at a few markets. This is the 4-hourly intraday price chart for euro dollar, and we can see that there was a substantial sell-off after that retest of previous support now as the newly found resistance around 1.1090, 1.11, the level that we were talking about last week. Bears are in complete control below 1.10, which is a cluster of these two previous lows, potentially looking for an extension to the downside. So a couple of ways to look into the key trading areas going forward. We're either going to see a consolidation here, oversold rally into 110, 110.20, even 110.50, which would be a falling resistance trend line retest and the cluster of these two previous lows from the pivots point of view and also moving averages point of view and trend line. So multiple layers of evidence are pointing to that area. So either an oversold bounce back into that level and a rejection would also be considered to be quite bearish, potentially opening the way for a retest of 109.50. Loss of 109.50 could target 109, which is nice and even number, possibly even 108.50 to the downside. Alternatively, if we see a rally from the current lows and a breakout, the end of day close above 110.50, that would negate the bearish outlook, potentially causing a short squeeze, because that would be a trend line breakout targeting 111.30, 111.60. Only a breakout above that 112.50 might come in play. Cable also appears to be under pressure. This is a 4-hourly chart. Loads of analysts are pointing to a formation of left shoulder, potential head here, and then complex right shoulder here with a neckline. I would see this as a rising trend line, which was a support. Now it becomes resistance. Key trading level at 1.30, nice and round number. If we see an oversold bounce back from the current lows into 1.30 and a rejection from there, it would appear to be quite bearish, potentially targeting an extension to the downside towards 128.80, 128, 127.70, possibly even 126.50. Alternatively, if we see a breakout, a rally from the current lows and a breakout and end of day close above 1.30.30, 1.30, 120, that would negate the bearish outlook, potentially causing an oversold bounce back or a short squeeze higher towards 132.70, 133.50. Dollar Japanese yen, nicely uptrending. We are seeing the trend line here connecting the sequence of higher lows. The current price is above multiple moving averages, and the most significantly, it's above this psychologically important 109.50 area, which was the resistance in the past which was broken. So as long as the price stays above 109.50, bulls are potentially in control, looking for a move higher and retest of additional upside resistances towards 110.50, 111, 111.50 on the upside. Alternatively, if we see a corrective pullback lower, then this rising support trend line would be closely watched by many traders, and this area of interest here, a zone of support at 109, 108.65. Only the loss of 108.65 and the retest of that level from underneath the end of day close below that level would change the bullish outlook, potentially opening the way for a deeper corrective move towards 108, 107.70. Gold is also consolidating. We can see that energy is building up here. I draw this trend line in two different ways, either connecting the wick and the low, a high or a lower high, and then I can also draw it, use this kind of way as well, closing level and closing level. Both ways are correct. There's no problem with doing it in both ways, but it's going sideways, so it's supported by 1552. We're seeing oversold bounce back in something that appears to be a rising wedge. If we see a breakout higher, then 1581, 1590 would be an area of interest. Breakout above 1590 would be quite bullish, potentially looking for an extension to the upside towards 1600, 1611, 1614. Alternatively, if we see either a rally and a rejection or a loss of these current support around 1565, a dip below, then this rising wedge would appear to be bearish, potentially opening the way for the retest of support at 1552, 1550. Loss of that level, possibly even 1540 to the downside. Lastly, let's talk about crude oil. Crude oil is under pressure at the moment. The impact of a virus in China and the way it's spreading has an impact on potential demand, global demand for crude oil. And the price for crude oil appears to be quite bearish. We are seeing a sideways consolidation here in something that appears to be a symmetrical triangle. They have the tendency to break to the downside if they're seen in a clearly defined downtrends, and we can see this one here: high, lower high, lower high. Confirmed loss and end of day close below 49.80, possibly even 49.65. A retest of that level from underneath as a newly found resistance could potentially open the way for a deeper corrective move lower. 47, 46, possibly even 45 might come in play over a longer period of time. Alternatively, if this level of support holds and we see a breakout higher above 52, an end of day close above 52, that could be perceived to be quite bullish, potentially causing a short squeeze and an extension to the upside towards 53.37, 55, 55.60, which would be our R2 in pivots, and also falling resistance trend line. And also there's plenty of fibs around here as well. So thank you for watching, thank you for listening, stay safe and happy trading. Bye for now.